Welcome to the Tax Compass podcast, navigating UK tax for expats with LSR Partners. The UK non-domicile system is being abolished from the 6th of April 2025. In this episode, we talk about the changes and how they will impact non-doms and people looking to move to the UK. Yeah, so I think the best starting point is when we think about what the old system was, do you just want to run through where we started and where we're going to go to?
Yeah, okay. So in terms of the current scheme, which is available until the end of this current tax year, so somebody like myself who's always been a UK tax resident, born and raised in the UK, I am taxable on my worldwide income, and that is the only option that I have. That's known as the arising basis of taxation. Now, for somebody who was coming into the UK for the first time, having never lived in the UK, they were eligible on the basis of being not domiciled in the UK for something called the remittance basis.
It's probably worth saying at that point that the domicile thing, we get a lot of people, don't we, who come and say, I'm non-dom in the UK, and they get confused between residency and domicile and all this sort of stuff. And I think the key point of how it always used to work was people who are sort of transitory visitors to the UK had a special tax treatment.
Yeah.
So they'd just be getting taxed really on the sort of UK end of what they were up to.
Yes, unless they brought the money into the UK, at which point they were taxed.
At which point it became sort of the UK end of what they were up to.
Yes. There was also the kind of, I say, special regime, but effectively automatic remittance basis. So if people were receiving small amounts of offshore income and not remitting that to the UK, effectively no elections need to be made.
It just makes it easier for people.
Yeah, effectively.
And that level was what, £2,000? So it's or it still is for this year, but going forward, that's going to go, I think, isn't it?
Yes, yeah. From next year.
And what's the driving factor behind it? I guess we think fundamentally it's always been a bit of a political hot potato, hasn't it, in terms of when they brought in the remittance basis charge, which was for people who I think were being tax residents for, was it 7 out of the last 9 tax years? Yeah,
so in their 8th year of tax residence.
Yeah, they've had to start paying 30 grand to remain non-doms. And there was obviously the whole business with Rishi Sunak's wife and all that stuff. So it's sort of politically, it's always been moving towards getting rid of it.
Yeah.
And that's now happening. And it feels like the current government have sort of taken the proposals that the Tories had sort of drafted as coming in at the same time. So from the 6th of April, 2025.
Yeah.
And they're moving that now a little bit further. What's the key takeaway that people have got to take from the new system as it stands from the guidance we've seen?
So I suppose the starting point from the 6th of April 2025 onward is that effectively your worldwide income is taxable as a starting point as soon as you arrive in the UK.
Yeah, so for anyone who's a UK tax resident, from the 6th of April, you're sort of done. It's taxable wherever it is, whatever it is. If you're a UK tax resident, it's taxable in the UK.
Yes, but there is going to be some relief available for those who effectively are considered, say, temporary residents in the UK, but are in the UK for a relatively short period.
And haven't been in the UK prior. Do you want to talk a little bit about the pretty stringent rules as to when for whom this new regime is going to work?
So effectively, in order to make it work for you, you have to have been UK tax non-resident domestically. And I use the word domestically, but by the terms of the statutory residence test, for at least 10 years prior to your arrival.
And that's 10 consecutive years, right? It's not, you can't sort of say, oh, well, I've done 10 over the course of the last 15. Any single year of UK tax residence kills you, right?
Exactly. And we are looking at including treaty residents. So, for example, there were a few people who became UK tax resident during the pandemic because they arrived in the UK or got stuck in the UK when they were when the pandemic kicked off and their countries of residence wouldn't let them back into the country.
Sounds familiar. I think I was in that situation, right?
You were in that situation. So for people like that, treaty residents can't be utilised to...
Yeah, so it's just under the statutory residence test. Basically, if you're physically in the UK, you're going to be stuffed.
Yes.
And I think it also applies, doesn't it, for like split years or anything like that. Yeah. As soon as you've got any period of residence in that sense, you're done.
Exactly. So I suppose there will be those who will be arriving in the UK for the first time that they've ever lived in the UK. Those people will be fairly clear cut. But for people who maybe, whether they're per the old rules, domiciled or non-domiciled in the UK, people who've left the UK and or who have lived in the UK, then have left the UK and then have come back to the UK. For those people, then realistically, you're going to need to do a bit of analysis to make sure that per the terms of the statutory residence test, you were considered non-resident for 10 consecutive years before arriving back.
So therefore we can look at it and say, right, it really is for what you might think of as sort of substantively new people who are, coming to the UK for work or whatever it might be.
Yeah.
But then I suppose we've got to look at it and say, right, there are two aspects to the new rules. There's what do we do about income and gains if we've been claiming under the old regime that we haven't remitted into the UK? What do we do about those?
Yeah.
And then the second part is what are they doing for people who've come into the UK under the new system? So I think we've got the sort of what I think they call the Temporary Repatriation Facility, which is very much for income and gains that have already arisen before this new regime starts, but need to be dealt with afterwards. And then as a second point, there's the 4-year FIG regime, which is sort of the prospective thing going forward.
Yeah.
So just talking a bit about the Temporary Repatriation Facility, do you want to run through exactly how that's going to work?
So effectively there's going to be a 3-year window for 25, 26, 26, 27 and 27, 28, where effectively people who have previously been taxed under the remittance basis they're calling it designate. They can designate an amount to be remitted to the UK. It doesn't have to be remitted during that 3-year window, but they can kind of effectively pay tax at a advantageous tax rate.
And so that works in the sense of like, I've got a gain of £10,000 that's sitting outside the UK that I made in, let's say, the 23-24 tax year.
Yeah.
So what we're saying is that in the 25-26 tax year, for example, I could go to HMRC and say, I've got a £10,000 gain that I might want to bring into the UK at some point in the future. I want to claim that under the Temporary Repatriation Facility, stick it on my tax return and pay tax at
12%. For 25, 26 and 26, 27, it'll be 12%. And then for the third tax year, it will be at 15%. So you'd be paying tax at 12% instead of potentially, if it's a capital gain and subject to capital gains tax, 24% based on the current tax regime.
Yeah. And so people are going to have to make a judgment call based on their own personal circumstances as to whether or not you sort of fess up to pay 12% now. And at least that's then sort of clean income or gain that I can then bring into the UK and I don't have to worry about it. Or I could actually say, well, I don't think I'm ever going to have to remit that money in. So actually, I'm just going to leave it. The risk being that if you wait until after the end of the 3 years, you might end up having to pay tax at your highest marginal rate. So if it's income gains, you could be moving from saying now I'm paying 12% to not saying, needing to bring it in and whoops, I'm now 45% or whatever.
Exactly. So it will be a case of weighing it up as to what's the likelihood of you actually needing to bring that money in. And there are so many people who we've dealt with previously who, when they first arrive in the UK, their intention is genuinely to only arrive and spend a few years in the UK. So they're going to claim the remittance basis. They're not going to bother remitting that income to the UK. They arrive, they find they actually quite like it, and they want to buy a house. And now all of a sudden, all this unremitted income's got to be brought into the UK. Generally ends up being taxed at a higher rate than it would have been taxed at if they'd have paid tax on it as they went. So it's a really good opportunity for a certain category of people. So yeah.
And in terms of the so that's for income and gains that have happened before the new regime starts.
Yeah.
Do you want to just walk through how they're going to deal with foreign income and gains going forward from the 6th of April next year?
So effectively, if you're eligible for the scheme, which, as we've already mentioned, you've got to have been non-resident for at least 10 years, it's eligible for 4 years, 4 consecutive years from when you become a UK tax resident. So we've kind of discussed previously, or I say previously, but off camera, in terms of, if you arrive in the UK, say during the 25-26 tax year, that is year 1. If you then end up going offshore again and becoming non-resident for year 2 and year 3, when you return back to the UK 3 years down the line, you can kind of claim it for the fourth year.
The fourth year, but you don't get to have another 2 years. Right?
Exactly.
So basically the clock starts in the tax year you come in.
Yeah.
And it's the next consecutive 4 tax years where you have this opportunity.
Yeah.
But if you're non-resident in any of those years, that doesn't change the calculator, as it were.
Exactly. In terms of how it works. It's slightly different to the remittance basis in as far as with the remittance basis, pretty much anything, if it was offshore income kind of, and you kept it outside of the UK, there wouldn't be tax obligations associated with it. But from a UK tax perspective, there are going to be certain types of income that will fall within the scope of UK taxation automatically, even if they are offshore income.
And that's really important, right? Is that from the 6th of April, you are taxable. If you're a UK resident, you're taxable on your worldwide income as a starting point. And so it's really important that people flip it in their minds to thinking about, I'm taxable on everything. Is there a way that I can reduce down my tax obligations by using this new scheme? Yes. Whereas I think the way I always looked at the remittance basis was it was a bit more of it's not taxable unless I do something with it, i.e. bring it into the UK.
Yeah.
So it is a fundamental change in the way you have to look at your foreign income and gains if you've got them and you're a UK tax resident.
Yes. And the other difference to the remittance basis is that if you want to take advantage of the foreign income and gain scheme, you actually have to include it and quantify the amount that you're looking to claim relief on through your tax return.
Yeah, so it's a claiming relief thing, not a I'm bringing it in so I've got to pay tax thing.
Yes.
And what relief do you get if you put it on your form?
So if you put it on your form, as long as it's income that falls outside the scope of UK taxation per that scheme, then you'd get the tax relief. You wouldn't end up paying
any tax, right?
Tax.
So it's important for people to realise there's a lot of bandying around of this 12% or 15% of people thinking, oh, maybe I'm paying the lower rate on income that I bring in under this new foreign income and gains.
Yeah.
Actually, the way it's drafted at the moment is no, if you claim under the scheme and you quantify your income and gains that are foreign, under the scheme, you don't pay any tax at all. So it's actually more favourable than I think some people might think it is.
Yes. And it also, under the foreign income gain scheme, it doesn't matter where that income is. So you could kind of say, right, well, it's technically now it's outside of the UK. I'm declaring it through my tax return. I'm claiming the relief. If you then bring that money into the UK in a later year, it doesn't matter because effectively it's either taxable or it's not taxable.
Yeah, but people have got to understand, right, that if you don't put it on your tax return, the default position is it's taxable, and if you haven't disclosed it, it's taxable, and you're not disclosing it.
Yeah.
So I think there's quite a lot of scope there if people don't really understand how this works, that you could accidentally be not putting stuff down, and actually that's fixable. HMRC could have all sorts of fun with investigations. And
you have a deadline. So the deadline to be able to make that claim is the 2nd January after the end of the tax year. So effectively, by the time your amended tax return would need to be done.
So just in real numbers, so 25, 26 the first year.
Yeah.
So you'd have until what, the end of January 27 to get it all sorted?
No, the end of January 28. So when effectively, so
the tax return will be due 31st January 27.
Yeah.
But you then get another year in order
when you could effectively amend a tax return. So if you don't make that claim in that window, you lose that opportunity. And again, it could lead to HMRC if they're being informed by offshore.
There's all sorts of things that they can get their teeth stuck into, isn't there?
Exactly.
Investigation.
And similarly, I would imagine part of the reason that they're asking for you to quantify what income and gains you're not declaring, so that they understand what sort of income and gains they'll be expecting after the end of the 4 years.
Yeah, absolutely. Okay, so Overseas Workday Relief.
Yes.
So that's part of the remittance basis under the current scheme as it operates now.
Yes.
And what we're thinking about there is people who, again, sort of benefit from being non-dom, work in the UK, but do a certain amount of their work outside the UK. And I think under the current rules, you can do that for your first 3 years of UK tax residence.
Yes.
And you have to, again, keep the money offshore. So we have clients who will have like a Jersey bank account. They get paid into that, and then they could demonstrate that for their 25 work days of the year when they worked overseas, they have enough of their salary sitting in an offshore account so that they don't pay tax on it in the UK by claiming Overseas Workday Relief.
Yes.
Are they getting rid of that completely? Is there going to be a replacement? How's that going to work?
So they are introducing a replacement. I mean, fundamentally, the whole concept of, I suppose, the non-dom regime, the foreign income gains scheme, Overseas Workday Relief, it's all designed to entice executives and highly qualified expats to come to the UK and
help the economy.
Help the economy, exactly. And so they are maintaining Overseas Workday Relief. They are changing it For starters, the money no longer has to be kept offshore. You can apply for overseas workday relief, irrelevant of whether the money is in the UK.
Yes, I think you can just literally have your salary paid into your UK bank account, and then it's just a sort of tax calculation that you do, and there's none of this sort of, as you say, idea that physically it has to be somewhere else.
Exactly. It's available for the full 4 years of the foreign income.
So that's an increase, right, from the 3 years currently?
Yes. But there are going to be limitations applied to it in terms of it was going to be limited to the lower of 30% of your overall work days or £300,000. So
30% of your earnings in that job, right?
Yes. So I suppose in the majority of instances, probably the 30% would be the limiting factor. But there will be some people who will be limited to the 300,000. It's also going to affect, whereas previously people could claim overseas workday relief on offshore earnings if they were, self-employed or actually undertook employment outside of the UK. Any sort of employment or self-employment is going to, as a starting point, be taxable in the UK, and overseas workday relief would have to be claimed. There's other things such as a lot of people who are going to be claiming overseas workday relief are going to be receiving things like bonuses and employment-related equity that's got earnings over large periods of time or kind of a number of years. They are going to be applying limitations on that as well. So if, for example, you received a bonus in the second year of residence and you didn't claim overseas workday relief in that first year of residence.
And the bonus was for that first year.
Exactly. You would not be able to claim the overseas workday relief in relation to that first year.
I suppose that's a bit like currently where we have this thing where when we're apportioning RSUs or whatever, stock-based compensation, if you've claimed overseas workday relief, then you can use those days of relief to reduce your proportion of those awards taxable in the UK. But what they're saying now is you can't look back and sort of claim it for a previous year. So you have to make sure you're claiming it in the right period. If you think you're going to get some form of compensation that's going to relate back to previous years.
Exactly. So yeah, but effectively it's still going to be available and still hopefully going to be enticing the right people to be coming to the UK, which is obviously what they're intending on doing.
Yeah. So I guess where do we end up? It's good that there's going to be a continuing system of allowing newly arrived people in the UK to get benefit from being in the UK, but not being taxed on their foreign income and gains.
Yes.
It sort of feels a bit like I don't know. To me, it still feels a little bit of a transitory type thing, and I'm sort of cynical as to how long this scheme might last. But yes. I guess we'll just have to wait and see, where it gets to in terms of future legislation, what impact it's going to make sort of more broadly. It's I guess hard to see. But the one big takeaway is that for all of our clients who are in the UK and are working just on the basis of I claim the remittance basis, you really do need to realize that this is a big change, because it is going to be the case that we're going to have to make sure no longer can we have that whole setup of people going, oh, don't worry, I haven't remitted anything. I don't need to know about your rental property in the US and your stock portfolio in the US. It's now going to be, we need to stick it all on your tax return to claim the relief.
Yes.
Because if you don't, you're technically avoiding tax in the UK. Exactly.
Or evading if you're not declaring it. I think as well, it wasn't necessarily announced in the budget, kind of in the speech itself, but having looked at some of the documentation that they've been releasing alongside the budget, there's a big focus in terms of offshore income and gains and compliance, and trying to get how best to tackle, I suppose, fundamentally tax evasion where people aren't declaring it.
So I guess the one of the other points is, I've just come to the UK, let's say, I'm claiming the remittance basis. I've been here for 2 years.
Yes.
What happens to me?
So if you've been in the UK for 2 years, and we have to be thinking about split year treatment as well, because if you're a split year, that's going to count as a year of residence. But if you've been in the UK or tax resident in the UK for 23, 24 and 24, 25, once you get to 25, 26, then effectively you would have 2 years left, assuming that you met that criteria of the 10 years out.
And in that situation, it's the 10 years before 23, 24 in that example.
Yes.
So you can still join the scheme sort of partway through, as it were,
yes,
provided you had that 10-year block of non-residency before your first year of residence within this 4-year window.
Yes, yes. And in principle, it might bring some new people into the opportunities of that scheme. So, for example, in the current scheme, under the remittance basis, if you were born in the UK to a UK domiciled father or mother, if you're born out of wedlock, you're going to be considered domiciled in the UK for any year that you were resident. So people who have genuinely been outside of the UK for 20 odd years and have just arrived in the UK might automatically be considered domiciled in the UK.
And therefore wouldn't be available to them under the current.
Exactly. They might actually start falling under the scope of the fixed regime. So there's a potential opportunity if you've got maybe uncrystallised offshore income and gains, subject to certain criteria. You may find that actually, if you were to then maybe realise those gains in the years 2, 3 or 4, that actually there might be some benefits available to you that weren't there previously.
Yeah, and I think one of these we're not going to talk about today, but we will do in the future, is the way that this is also, this removal of the domicile concept from tax is going to change inheritance tax, obviously, because that's sort of the, if you like, the famous tax that is based around domicile under current rules. But again, because the whole concept of domicile from a tax perspective is going to go away, there are obviously significant changes that are happening there too. Yes,
there's going to be some pretty substantial changes in terms of inheritance tax if you're considered to be a long-term resident.
Yeah.
Which, again, is something that may potentially be looking at driving a number of those who are currently non-domiciled outside of the UK, as well as the changes to capital gains taxes as well, which, again, I don't think we'll particularly be touching on in this particular conversation. But there's a lot of people looking at leaving the UK because of capital gains tax rates as well.
Yep.
We probably do need to just talk about capital gains tax and how that's being impacted by the changes to the remittance basis. There's a bit of transitional relief in terms of if you have previously been taxed on the remittance basis prior to the end of this current tax year, and you have uncrystallised gains come the 25, 26 tax year and on. If you owned the assets as at the 5th of April 2017, then HMRC will allow a rebasing. I think those were the only criteria.
It was, there are certain specified assets, but the key thing is if you've got a long-term ownership of an asset, you are allowed to rebase it to the 5th of April 2017.
Yes.
Wasn't entirely clear to me why they came up with that, but they came up with it. It aligns it with, there were some other rebasings on there at that date.
Yeah, and there were some changes to deemed domicile as well at that date. So I think that's probably why they
picked it. Oh, usual stuff.
Yes. Having said that, if you, for example, are currently non-dom and taxable under the remittance basis at the moment, you might actually be thinking, well, is there any merit in crystallising some gains in this year when I'm claiming the remittance basis? And then considering whether to designate those.
Yeah, so that's an interesting point, right? So if you think about where you'd be this time next year, you would be crystallising a gain overseas and it would be taxed if you didn't make a claim under this system. Now, I guess the point that people need to think about is to say, well, hang on a minute. If I crystallised a gain under the FIG system in the 4 years, I can get that tax-free if I designate it. Versus if I were to crystallise it this year under the remittance basis, it would be tax-free if I didn't bring it in. But then if I brought it in, I'd pay the 12%.
Yep.
So I guess if you don't need to crystallise it, if you crystallise it into the next tax year, you can actually get it completely tax-free. Is that right?
Well, as long as you've been as long as you're in your first 4 years and eligible for the FIG scheme, there might be people who are in their year 5, 6 or 7 who wouldn't be eligible for the FIG scheme.
Yeah, so that's a really good point, right? So because the remittance basis, before the remittance basis charge kicks in, gives you 7 years.
Yeah. You
could be in, as you say, year 5. The FIG scheme is out the window. I'm taxable on everything right now. From the 25, 26 tax year, any gains that crystallize. So you always want to look to try and rebase assets or whatever, crystallize some gains under your final year of the remittance basis. And then if you need to bring them into the UK, you can elect to bring them in under the FIG scheme. Yep. But would you no, because it's not the FIG scheme, it's the
Temporary Repatriation Facility.
Repatriation Facility. And the Temporary Repatriation Facility is separate to the FIG scheme.
Yes.
The Temporary Repatriation is for people who were previously under the remittance basis.
Yes.
So that's a good planning opportunity for people.
Yeah. I think there's other things, I mean, in terms of things to be aware of for people and things like that might catch people out. People who were taxable under the or kind of were eligible for automatic remittance basis claims rather than having to do tax returns, etc. All of a sudden, they're going to fall within the scope of needing to file tax returns with HMRC. So they need to be aware of it. They probably won't necessarily even might just be pootling on their merry way, but they need to be thinking about their obligations nowadays.
So just to be clear on that, what we're saying here is that under the current system, they have this concept of the automatic remittance basis, which essentially says if you've got less than £2,000 worth of foreign income and gains, you're deemed to just be able to have that.
Yes.
As a sort of freebie.
Yeah, you don't need to make an election in order to be able to.
You don't need to do anything, and you don't need to do a tax return. If you've got an overseas account that's making you £1,000 worth of interest a year, you just wouldn't need to do anything.
Yeah.
Because that's going, and you're taxable on everything. That is now something that you need to disclose to HMRC and stick on a tax return.
Yes.
So that's actually, it's a sort of small change because the tax liability is going to be relatively small. Yeah. But in terms of the admin involved for a load of people who will be in that situation, that's actually quite significant.
Yes. And again, HMRC are all about offshore non-compliance at the moment, and they can look back up to 12 years, even if you haven't intentionally tried to avoid paying that tax or eliminate that tax. But as long as you haven't taken reasonable care, they can automatically look back 12 years without any kind of deliberate element to it. The other thing as well, I suppose, is for people who maybe have been taxed on the automatic remittance basis or have had eligibility for the automatic remittance basis, there are certain things, for example, that rebasing approach in terms of capital gains tax, if they've never needed to declare it because they've got actually some pretty massive uncrystallised gains, they might want to be thinking about whether actually there's any benefit to making a remittance basis claim in this current tax year. So there are various things that maybe aren't necessarily quite so
obvious.
Yes. Yeah. That maybe people might want to be thinking about. So
and look, it's that classic thing, isn't it? This is a big change, especially in our business, because we deal with so many people who are sort of offshore, onshore. It's the classic thing where this is a significant change. There are always opportunities, stroke pitfalls that people have got to be really, really aware of.
Yeah.
And that's certainly something, I mean, we've already had a number of questions from clients as to how this is going to impact them. There are even down to people getting a bit concerned about how does this change my residency position, even though it's really nothing to do with that.
Yeah.
And it's the classic thing of like big change often leads to unintended consequences.
Yes.
You can already see with some of the legislation that, or not the legislation, the sort of technical guidance that's come out, that it hasn't entirely been thought through. And they've even said, I think in the announcements that, we're going to continue to work on this. And so, it will definitely present people with opportunities and risk. I think
that one of the biggest challenges you might have, I mean, the amount of conversations we must have had with people who have turned around, who've kind of got in touch. Oh, well, my income's offshore and I thought I'm paying tax in the other country, so I didn't need to pay tax in the UK. People who just remain oblivious to it. There is a hard deadline for making a claim for the foreign income and gain scheme. And if you don't make that claim, then the window's gone and you will be taxable on that income. So there is a serious risk that if people don't figure out what hoops they need to jump through and don't jump through those hoops, they could end up getting stung in the future.
Yep. Yeah. Well, look, I mean, I think that's been a good sort of summary of where we are. And no doubt we'll be fielding a lot of calls in the coming months as we lead up to the changes. And yes, it will be interesting to see precisely what some of the practical implications are as we go forward. And I suspect this will be a topic that will definitely be revisiting.
I think so too. And I think the other thing as well is there may be some people who might not necessarily think about it until the new scheme is implemented. I think this is the planning opportunity. This is your planning window. You've
got
less
4 or 5 months, and that's
yeah,
it, right?
yeah. So I suppose my guidance would be to anybody who might be impacted by this, whether they're like non-DOMs who are currently on the remittance basis, or whether they are new
arrivals, people thinking about coming, that sort of stuff.
Yes, I would say now's the time to have the conversation. Now's the time to do the maths and figure out what the best position is going to be.
And I think that point you made at the end, which is the difference in the length of windows, that is really interesting. That there will be people out there where it makes sense now to claim 1 year of remittance basis this year.
Yeah.
Because that could have real advantages. So lots to think about.
Yeah.
Thanks for listening to the Tax Compass podcast, brought to you by LSR Partners, where we help you pay the right tax in the right place at the right time. Book a call with us. Details are in the show notes.